Welcome to qiphyedu. Today I'll be looking at economics, A2 level, paper 32, February, March 2021. Alright, let's start. Okay, so for the first question, it says, over time, the average total cost curve of a firm is lowered, and which form of efficiency does this represent? Okay, so let's look at the four options here. If you look at these four options, the only ones that are valid efficiencies would be either A, B, or D. Pareto efficiency does not exist. It's Pareto optimality. Basically, when no one else can be made better off, we are making someone else worse off, which is it's basically the same principle as allocative efficiency when it's at the social optimal level, or also when P equals to marginal cost. So if you look at the question, it says over time, the average total cost curve of a firm is lowered. This means that your average total cost curve, for example, ATC1, drops to ATC2. This one here would then be what the question would want us to try and answer. So if you look at A, that's allocative efficiency when price equals to marginal cost. Therefore, the answer is not this one, because here there's nothing that says that price equals to marginal cost, or nothing that says that the items are produced at the social optimal level. Therefore, A is incorrect. Now, if you look at B, it says dynamic efficiency. Dynamic efficiency actually matches what the question wants, because dynamic efficiency is basically when there are technological processes, this will result in an improvement in productivity, and then when there's an improvement in productivity, your quantity will increase. When quantity increases, your average total cost will then also decrease. So the answer here will have to be B. Now, why D is incorrect is because it's productive efficiency. Productive efficiency is only when you are producing at the lowest point of the LRAC curve, but not taking into account the future changes in technology, which will reduce the ATC to a curve lower than it. We are talking about the current curve and then at the lowest point. So answer would not be productive efficiency, but rather dynamic efficiency. So answer is B. Question 2, the diagram shows the private and social marginal cost and benefits curves for the antibiotics market, medicine basically, and the market equilibrium is at point X. And why does market failure occur? So the social optimal level is when MSC equals to MSB, which is P1, Q1, but you're producing at point X, which is P and Q, so the price is lower and the quantity is also lower, so under consumption. So anything here that says production will be wrong, so B and D is ruled out, so it's either A or C. So A, it says there's overconsumption and overpricing. There's no overconsumption. In fact, I shown that there's a lower quantity that's being sold, so there's also no overpricing because the price is much lower than what it is. So answer here will have to be C. There's underconsumption and underpricing. Question 3, the table shows the results of a cost-benefit analysis of the construction of a new airport, and what is the total value in US dollars million of all the externalities created by construction of the new airport. So in order to calculate the externalities, you have to calculate the total from both the external cost and also the external benefit. So to calculate external cost, you take SC minus PC, or also social cost minus private cost. So by doing so, you'll get 450 minus 400, and then this one will give you 50. And then we're now going to calculate external benefit. Just take social benefit minus private benefit, so that'll be SB minus PB, 480 minus 440, you get 40, so you just have to add that up together, and then you get 90, so this one will be $90 million of externalities created. So answer is D. Question 4, utility maximizing consumer has a fixed income and can choose between good X and good Y. The diagram shows the budget line and different consumption combinations of products X and Y. Which consumption combinations are currently available to her? So the budget line is basically the maximum combination of two goods that a consumer can buy given his or her income, and also the price of the two goods. Therefore, if you see in this budget line here, you're only able to buy anything that's within the budget line or on the budget line. So anything that's outside is unachievable because the person either has not that much income, not that high of an income, or the goods itself are just too expensive. So F and K are not achievable. So we can just directly rule that out. So we only have four options left: G, J, H, and L. So anything here that still says F or K would then have to be ruled out. So A and B is wrong. C is also wrong because there are only three options. So the answer here will have to be D, G, H, J, and L. So circle D for that. Question 5, rational consumer Romesh spent 90 rupees buying herb X and spice Y. Both cost 10 rupees per gram, and how much of each should he buy? Okay, so then we need to maximize his spendings of 90 rupees. So if you look at A until D, you see it's 2 grams of herb X and 3 grams of spice Y. So you add up together, you get 5 grams. 5 grams times 10 rupees, you get 50 rupees. So that's not maximizing his spendings, so that's not the answer. If you take B, it's 3 plus 5, so 8. 8 times 10, you get 80, so it's still under purchase. So it has to be 90 rupees. So that'll be either C or D, because if 4 plus 5, you get 9. 9 times 10, you get 90 rupees. But let's look at the total utility. In this table, you cannot use the equity marginal principle because this is not marginal utility, but rather total utility. So if we calculate by taking 4 grams of herb X, this one will give us 45 total utility. And then for spice Y, that will be 42, so we add up together, we get 87. And then for D, that will be 5 grams of herb X and 4 grams of spice Y. That will be 55 plus 35, so we get 90. So the one with the highest total utility would be the best one to maximize his 90 rupees spent. So answer is D. Question 6 in the diagram, TC is a firm's short-run total cost curve, and which statement is correct? So if you look here, this is the total cost. This one is the total fixed cost. The difference between the total cost and the total fixed cost would be your total variable cost. So A, it says average total cost is minimized at output OQ3. That one will be correct, because you can see here the curve itself is increasing at a decreasing rate, then increasing at an increasing rate, but it's only still at this point rather than here at this point. So yes, this one will be correct, but let's look at the other 3 options. B, it says average variable cost is minimized at output OQ2. This one is incorrect because, as I mentioned just now, this is the total variable cost. And then if it says that average variable cost is minimized at output OQ3, that's also wrong, because average variable cost is basically when you take the total quantity and then you total variable cost and then you divide it by our quantity here. The one that would be the correct one would have to be quantity 1 instead of quantity 3, because you can see it has the smallest total variable cost. Right, you just have to look at the area, then you roughly know which one is the answer. So then this one for average variable cost, it has to be OQ1. And D, it says marginal cost is minimized at output OQ2. This one is also incorrect. You can see here that, like what I mentioned just now, there's a decreasing rate of increase in the cost, but then you have to look at both Q2 and Q3. If you look at Q3, it's slightly increasing at a higher rate, but if you look at Q2, it's only increasing like very little. It's almost like a flat slope. So this one is when your marginal cost would then be minimized. So it's not OQ1, but instead of that, it's OQ2. So therefore, the answer here will have to be A. Question 7, what is correct about cartels? Now, cartels exist because of oligopoly, because there are only a few sellers in the market selling homogeneous goods. So they can choose either to work together to sell the item at a higher price, basically act like a monopoly, or they can choose to compete with each other, resulting in probably some people having losses and all those because of the king demand theory. Right, people decreasing prices resulting in the demand to be inelastic, but people who actually sell at a higher price resulting in the item being elastic. So if you look at A, it says they are a form of trade union restricted practice. This one is incorrect. Trade union is basically when there are a bunch of employees working together to actually fight for their rights, maybe higher salary or whatnot. So A is incorrect. B says they are a type of industrial merger. Incorrect. They are different companies, but they sell homogeneous goods, but then they do not merge together. There's no horizontal integration here. So B is incorrect. Now you need to realize that because cartels, they actually sell at a higher price, resulting in a decrease in quantity. Some people may not be able to purchase the product, or some people have to purchase the product at a higher price. So to them, that would be it will actually harm their daily life. So the government has to intervene. So if it says C, it says they are often subject to government investigation. This one is correct. D, it says they establish a vertical link between firms. If I'm not mistaken, the vertical link here should be about vertical integration. Vertical integration in this case is not correct, because vertical integration is basically when you merge with other companies with a different production process. All of them have the same production process, selling this homogeneous product, so D is incorrect. Answer will have to be C. Question 8, when output increases in the short run, which statement is correct? So now let's draw out the graph of ABC, ATC, and also MC. Okay, so if you look here, it says average fixed cost first falls and then beyond some point rises. This one is incorrect. You need to know that your total fixed cost will always be the same, regardless of the quantity sold. So if you sell at, let's say the fixed cost is $30 and then your quantity is 10, that means your average fixed cost will be $3. But if your quantity is 30 and then your average fixed cost is still $30, which is going to happen, that means your average fixed cost would be $1. So there's a decrease, there's no increase. So A is incorrect because of that. And then B says average variable cost increases as soon as the law of diminishing margin returns begin to operate. Incorrect, because when the law of diminishing margin returns begin to operate, your ABC would actually become stagnant first and then it will increase back. So To say that average variable cost increases as soon as law of diminishing marginal returns begin to operate is incorrect because of that. And C, the minimum point of the average total cost curve occurs at a greater level of output than the minimum point of the average variable cost curve. So let's say the lowest point of ABC is here, the lowest point of ATC is here. It's not really obvious. Let me try to move it a bit. Yeah, something like that. So if that's the case, so if that's the case, right, the quantity for ABC is indeed lower on the lowest point. So this one is the answer. And D says when marginal cost reaches the minimum point, ABC must be greater than AFC. Okay, this is the minimum point of the MC. This is your AFC. This one is your ABC. So to say that ABC is greater than AFC is wrong. So answer here will be C. Question 9, the diagram shows a competitive industry facing constant marginal and average costs. In equilibrium, its output is OQC and the price is OPC. A series of horizontal mergers generate economy of scale and create a monopoly in the industry. The new equilibrium output is OQM and price is OPM. And which area represents the producer surplus after these mergers? Originally, it was at OQC and OPC, so that will be here. After a series of mergers, that means OQM and OPM, so that will be here. But then your curve would be ACM, MCM, so that will be here at this point where MCM touches MRM. So here you can see that because we're only selling at quantity QM, that means you can directly forego Z as the producer surplus because we're not selling at that quantity. However, we are selling at the quantity where the price is PM. So that means our producer surplus would have to be between the curves of ARM and also ACM. So the curves between ARM and ACM would have to be this, and then here. But then like I mentioned just now, the quantity Z will not be included because it's not part of the quantity of QM anymore. So it has to be W and X, so answer is B. That will be your producer surplus. Question 10, a firm that controls over 50% of the market successfully merges with a main competitor to form one large company. And what is the most likely reason why, from a firm's point of view, the merger will fail? So this is a large company with 50% of the market now merges with main competitor. So that means you need a lot of money to buy the competitor. So that's why it will fail, because you're not sure if you're able to gain a profit or get any break even in the next few years because of buying the company. So if you look at the four options here, A says a fall in consumer surplus. This will result in a successful merger because people will now buy at a higher price. B says cost of funding. Yep, this will result in failure. C says economy of scale. There will be lower economy of scale resulting in lower prices. So rather than failing, they will actually succeed. And D, market dominance. Now it suddenly becomes a monopoly. So this is not the answer as well. So answer is B. Question 11, the diagram shows a monopoly's cost and revenue curves. The monopoly changes its price from P1 to P2 and its output from Q1 to Q2. And which change in objective indicated by the move from P1 to P2. P1, Q1 will be here, so MR equals 0, that will be revenue maximization. Okay, and then profit maximization is when MC equals to MR, which is this point. So it's much higher price, but we're not touching that point. And then from P1, P2, Q2, that will be when AC equals to AR, that's normal profit, and also volume maximization. So it should be sales revenue maximization to sales volume maximization. So A and B is incorrect, and C is also incorrect because there's no profit maximization. But D says sales revenue maximization to sales maximization subject to earning a normal profit. This one had to be the answer, so answer is D. Question 12, the diagram shows the demand curve for a firm's product, and which diagram depicts the shape of the firm's corresponding total revenue. The demand curve is downward sloping, and it can also downward slope to the point where the price will reach the negative y-axis, which means negative prices. So your total revenue could decrease. It could then increase and then it could decrease because of the negative prices. The negative prices would then result the TR curve to be downward sloping. So if you look at A and B and D, all of them are basically constant or increasing prices, so that's all incorrect. The only one here that would decrease total revenue would have to be C, because it increases to the maximum point and then it decreases again because of the fact that there's a negative price here at the bottom of the x-axis. So answer is C. Question 13, the government is attempting to achieve allocative efficiency in the nationalized industry, so P equals to MC. So that will be here, AR equals to MC, so price of Z. So in order to achieve allocative efficiency, if it says price at W and X and Y, that will be incorrect because all these do not result in allocative efficiency. It will have to be D. It will set price at Z and make a loss. So answer is D. Question 14, the diagram shows a sign beside a busy road. What is this an example of? So you can see the signboard says this road was recently cleared of 17 bags of litter, and then clearing litter puts life at risk. So this is to urge people to not throw rubbish simply out of the road, right onto the roads, because people have to go and clean them. So this one means that this is nudge theory because there's no action taken against people who throw, just tell them to not do so. So if it's free good, it's not correct because free good means that the item itself is completely freed up with like air or something. But here it's talking about rubbish, so this is not the answer. B, it says government regulation. If it's government regulation, then people will be fined, so that's not the answer. It's also not a merry good because roads, you pay taxes to use the roads, so that technically is a public good. So answer has to be D, which is nudge theory. Question 15. Recent research has shown that consumption of some foods might be harmful. A government committee considers how to intervene in the markets and which intervention is most likely to reduce consumption of these foods without reducing income inequality. Some foods might be harmful, so D, very good. And then considers how to intervene without reducing income inequality. So A, it says minimum price for harmful foods would result in a decrease in supply and an increase in demand, so that's not the answer. B, says subsidy for substitute food. Yes, this will encourage people to buy substitute food. C and D, it says add valorant tax and indirect taxes. This will result in income inequality because indirect taxes would result, because indirect tax itself is basically a regressive tax, so this will result in people who are poorer to actually pay a higher percentage of indirect taxes, so D is not the answer. And then ad valorem tax is basically, so ad valorem tax is also not correct because it's actually taxes that are actually given at the point of time of transaction. So if you put ad valorem tax on harmful food, this one would also not be the answer. So answer has to be B. Question 16. In which circumstances is a poverty trap least likely to operate? So if you look at the four options, A says a female worker is paid less than a male worker for doing the same job. This is gender inequality but not poverty trap, so this is not so this is least likely to operate. Let's look at the other three options. B says a worker is paid the minimum wage and refuses a higher paid job because net income is lower after tax. Okay, this is correct. This is not this will result in poverty trap because people would rather just stay at the lower price, lower salary rather than actually going to a higher salary, because when they actually pay the taxes and EPF, they would taxes itself, they will actually end up with a lower salary to begin with. So they might as well just get a lower salary. C says the worker refuses higher pay work as it means more expensive travel and childcare costs. This one is also poverty trap. And D says the unemployed worker refuses a job because earnings are less than unemployment benefits. So let's say if you earn, you get 1,500, but then your unemployment benefit is 2,000. This will result in poverty trap. So answer has to be A. Question 17. Which would be most likely to cause the demand for labor in an industry to be inelastic? So if you look at A, it says labor costs are a small percentage of total cost. This one is correct. B, it says the demand for the final product has a price sale demand that is greater than 1. This one is incorrect because demand for labor is a derived demand. So this means that your demand for the final product, if it's inelastic, your demand for labor will also be inelastic. It's based on the demand for that product itself. And C, it says the workforce belongs to a strong trade union. This one is incorrect because trade union is basically when a bunch of employees, they actually come together to actually demand for higher wages and all those. This means that the demand for labor is elastic rather than being inelastic. And D says there's a large pool of readily available labor. This one is supply of labor has to be elastic, not demand for labor. So answer here has to be A. Question 18. Which influence is least likely to promote sustainable economic growth in a developing economy? Least likely. So A says high saving rates. This one would promote sustainable economic growth. B says involvement in free trade, it would result in sustainable economic growth because if there's free trade, then people can then buy items from your country, you buy items from other people's country, resulting in you having more capital goods to produce the item itself. And C says protected property rights, so it prevent smoke from coming out of the factory at that particular location, because the person who owns the land does not want that to happen. So this will reduce pollution, resulting in sustainable economic growth. Does not result in water pollution, air pollution, all those. And D, it says rapid population growth. This one is incorrect because rapid population growth will result in more people actually using up the current resources that we have. So this will not result in sustainable economic growth, unfortunately. So answer is D. Question 19. Governments are interested in providing statistics on the standard of living. They measure the value of material goods and services, and non-material characteristics that affect the standard of living cannot easily be measured. Non-material means that it's not physical or it's not seeable, not visible. So what is an example of it? So A says the failure to include unpaid work in the home. Unpaid work is part of material goods and services because it's mentioned it's already at home, the unpaid work itself, so A is incorrect. B, it says the freedom to make informed economic choices. This is basically what you think, what consumers may think. This one is not controllable because it's not material characteristics, it's not like physical items itself. So B is an example of non-material characteristic. C, it says the proportion of GNP used for weapons of war. This one is a physical item, so it's material characteristics, so this is not the answer. And D, it says consumer expenditure, when there's removal of taxes from all forms of consumer expenditure. This one is a material characteristic because you are removing taxes physically from all forms of consumer expenditure. So answer has to be B, the freedom to make informed economic choices, because it's not material characteristic. Question 20, the diagram shows Lorentz curves for a developed economy, and which combination of supply-side policies will shift the Lorentz curve from X to Y, so a decrease in income inequality. So you need to remember that if, let's say, your Lorentz curve looks something like this means that there's an increase in income inequality. But when it's actually almost at the same position as this 45-degree line here, that means that there is zero income inequality. If, let's say, it's completely straight. Alright. So if you look at A, B, C, and D, in order to actually reduce income inequality, you need to make sure that you do not increase income taxes for the poor, and also you should increase income taxes for people who are rich. So C and D is incorrect because you reduce top real income tax, so we can just abolish that. Education itself is a very good, everyone should have it, so it has to be free. So if you ask students to pay for it, that's not the answer. And you need to increase your national minimum wage so that people can get a much higher salary. Therefore, answer is A. Question 21. Two members of the Hernandez family have recently become unemployed. Mariana has lost her job at the local factory, which has closed because of competition from cheaper imports. Alfonso has lost his job as a shop assistant because the sales have dropped during a recession. And how would an economist classify these job losses? Okay, so if you look at this table, you need to first rule out the types of unemployment that are not included in your textbook. So if you look at A, frictional unemployment and seasonal unemployment are both part of voluntary unemployment, so that is okay. But if you look at B, it says regional unemployment and frictional unemployment. Regional unemployment is not included in both voluntary and involuntary unemployment in the Cambridge A-level textbook, so B is incorrect. If you look at C, it says structural unemployment and cyclical unemployment. These two are from involuntary unemployment, so it could be possible. And D, it says technological unemployment. There's no technological unemployment in the textbook, so D is not the answer. So answer will have to be either A or C. But if you look at the question again, it says Mariana has lost her job at the local factory because of competition from cheaper imports. So this is involuntary unemployment because of cheaper imports resulting in her having no job. So this one is actually structural unemployment. And Alfonso lost his job as a shop assistant because the sales have dropped during recession. That means a decrease in the AD. So this is cyclical unemployment. So A is incorrect because both of these are actually involuntary unemployment. So that will have to be C. Question 22. Which combination of fiscal, monetary, and supply-side policies is most likely to reduce unemployment? Most likely to reduce unemployment. So that means that you have to decrease taxation and also increase your government expenditure. So A and D is wrong. Alright, and then if you look at B, if you look at monetary policy here for B is decreasing the money supply. This will increase unemployment because of a decreased aggregate demand. People will now spend less because of the higher cost of borrowing. So it has to be C because decreasing taxation, decreasing interest rate, and also increasing flexibility in the labor market so that there will be more people being able to find jobs. So answer has to be C. Question 23. Which policy combination will reduce the level of national income by the greatest amount? So reduce your GDP. In order to reduce GDP, you need to increase direct taxation, so A, B is wrong. But then quantitative easing would actually result in your GDP increasing. So if you compare it with interest rates, you might as well increase interest rate in order to decrease your level of national income. So the answer here would have to be C. Alright. So because if you increase quantitative easing, the definition here is when the central bank purchases predetermined amounts of government bonds for other financial assets in order to stimulate economic activity. So D is not the answer because of that. Because it will stimulate economic activity. 24. In a closed economy, the marginal propensity to save is 0.1 and the marginal propensity to pay taxes is also 0.1. These values are constant and do not vary the level of income. So this is the multiplier process. So what you need to do in order to calculate the increase in national income, if there's an injection of 100 million, what they do is just take MPS plus MPT, you get 0.2. You take 100 million, divided by 0.2, you get 500 million. So answer here would have to be B. Right? Question 25. Which combination is consistent with liquidity preference theory? So liquidity preference, people will prefer to have money in order to purchase bonds so that they can be able to gain a return. So this is actually not determined by your changes in income, it's determined by the interest rate. So B and C is completely ruled out. And then D is also ruled out because there's transaction motive, which is not correct. Transaction motive is basically like money that you have to spend regardless. Like you need to spend on food, for example. You need to spend on the daily needs. So A itself would have to be the answer because speculative motive, so you speculate that the bonds will be at a lower price and a higher interest rate. And also determined by interest rate, so answer here will have to be A. Question 26, what is assumed by Keynesians? So Keynesians believe in government intervention. So if you look at the four options here, look at A first. An increase in supply always creates an equal increase in demand. This one is incorrect. B says government intervention is required to manage the economy, so this one is the correct answer. Let's look at the other two options. C says prices always adjust so that markets clear, incorrect. And D, the economy always has full employment, incorrect. This is not what Keynesians assume. The one that's being assumed is that government intervention is required to manage the economy, so answer has to be B. Question 27, which role correctly identifies injections into a country's circular flow of income? So if you look at private sector, it says savings is more than your investment. So if your savings is more than investment, that means that there's more withdrawals, more leakages. So it has to be no, so C and D is ruled out. And then for public sector, your taxes is more than your government spending. This one also means that there is higher withdrawal, so it has to be no as well. But here the trade sector here is that your exports is more than your imports, so this will result in injections because now you have more exports. So people will buy more of your exports and then you import less. So that will be yes. So it has to be no, no, and yes. So answer is B. Question 28, which policy by developed economies will be most beneficial for developing economies? So A, it says a ban on resource exploration by mining companies in developing economies. This one is incorrect because if you ban resource exploration, then the natural resources of that country cannot be extracted and then used for increasing output of a particular product. So it results in a decrease in output, same time it also results in a decrease in AD and then decrease in GDP. So it will actually harm the developing countries. B says restrictions on investment by global firms in developing economies. This one is incorrect. If you decrease your investments, it will result in less factories being developed, less items being imported into the country, to actually build up the country's industrial zones and all those. So this is not the answer. And C says the removal of restrictions on immigration of skilled labor. If you remove restrictions on immigration of skilled labor, this will result in locals not having jobs and then you as a company not actually training the workers locally will result in people having a higher unemployment. So C is also not the answer. But D says the withdrawal of agricultural subsidies in developed economies. This one is correct because if you withdraw agricultural subsidies in developed economies, people will have to end up buying vegetables and actually fruits from these developing economies, resulting in an increase in the net exports. When there's an increase in the net exports, this will result in a higher GDP of that particular developing country. So answer has to be D. Question 9, the natural rate of unemployment is in an economy is 5%. What will happen if the government persists in trying to achieve a target rate of unemployment of 3% by expansionary monetary policy, increasing money supply and also decreasing your interest rate, meaning that there will be inflation. But when there's inflation, it's actually because of the fact that if you look at your LIS curve, it looks like this, and then your AD curve looks like this. So now when there's an increase in aggregate demand, it looks like this, and your prices will then increase at an accelerating rate. So if you look at these four options here, we start with B first. It says a diminishing rate of inflation. This one is incorrect because there's not a diminishing rate of inflation. If it's diminishing rate of inflation, it will look something like this. And then C, it says a high but constant rate of inflation. The LRS curve will not look like this anymore. It will be constant. So that's not the answer. And D says a negative rate of inflation. If you look at the graph here, if it's negative rate of inflation, the AD1 will then go to AD0. So that's not the answer. Answer has to be A. Question 31 is a reflationary fiscal measure. That will be like inflationary or expansionary. So here, anything that is not related to fiscal policy would then have to be ruled out, and you can already identify that C and D are not the answers because C and D belong to monetary policy. So it has to be either A or B, and you need to remember that for reflationary fiscal measure, it could be either the other terms would be expansionary fiscal policy, or it could be inflationary policy. So if you look at A, it says increased government spending. That will be the answer. Why B is incorrect is because it says increasing taxes. That will be contractionary fiscal measure. So that's not the answer. So the answer here will have to be A. Alright. So this is the end of this video. I hope you guys find this video helpful. Do share this video out to other people who may need help with economics A2 level. As always, I hope to see you guys again in the next video. Till then, this is qiphyedu. Goodbye.